First thing to be aware of as we head into next week is that China will be on a 1 week public holiday. We also have Israel public holidays too as we go into next week. This is notorious during thinner liquidity to see more exaggerated moves in the market. As discussed with you on last week's report, don't get complacent on crude oil. We were getting a lot of questions after we'd seen over a $7 barrel breakout, taking the price from $65 to $72 per barrel, whether you should be looking to stay in the trade or bank further profits. What we stated during that report was don't be complacent. Make sure that you're locking in profits all the way here, especially as you get towards the end of the month. The end of quarter profit taking here for the end of September. What has happened with crude oil? It is absolutely tanked and taken the elevator down over the last couple of days, breaking all the way back down towards $66 per barrel. So of course, this is just the name of the game. Right now, it is the golden age of trading. Buy low, sell high, rinse and repeat. Don't get complacent, regularly lock in that windful amount of profit, which is exactly what we've done here at the Gold and Silver Club, as discussed with you this time last week on the commodity report. Make sure you lock in those profits. Otherwise, you just end up with a popcorn trade, which is where the market goes in your direction. Very quickly, you're in a lot of profit. If you don't bank anything, it just pops back down again. And then you're essentially left with no end result off the back of that. You've just wasted your time. We definitely don't want that for you. Regularly lock in those profits. Now, as well as we go into next week, we're seeing the dynamic at the moment with the markets where gold has broken out to all-time record highs. Now, I get asked a lot regarding our forecast for gold, what our target is. So as you know, we remain long our core position on gold. Very simply, gold just keeps breaking out to all-time record highs week after week. We're at the highest level of return for gold since 1979 in terms of the performance over the course of this year. And we've also seen gold break out to all-time record highs over 35 times this year. So very simply, we've kept the core position on. Currently, our target between now through to Q1 of 2025, it's $3,000 per ounce. Silver as well, as you know, we've kept two core positions on silver. We've kept those positions in play because silver has continued to break out above the swing highs. In fact, at the beginning of this week, silver prices, they broke out to the highest levels in a year. Our current target on silver is $35 per ounce between now through to Q1 of 2025. We may end up hitting that a lot quicker, but that's our target right now on silver. We may end up raising that target as well because we have two positions on silver. Now, alongside that, we're taking that opportunity again to bank a windfall amount of profit on both palladium, which broke out 15% over the month of September, and also crude oil, where we stacked the position. We got a dozen trades on when we broke all the way down towards $66 per barrel. We had a very fast impulse move higher. Crude oil prices, they broke out $7 to the upside. It was such fast profits that we took the opportunity to start layering out, bricklaying those profits, and of course the rest is history. Oil is broken back down towards the swing lows. I'm getting a few questions regarding whether we're re-entering here at the moment on oil. We still have positions on at lower prices, but in fact what we've done here is we've rotated profits into the dollar index, which is a beneficiary of end of quarter profit taking, and especially when you go into next week, we have China on public holidays, Israel on public holidays as well. Right now, every single dollar position that we have is currently in profit. I would look for more upside as we get closer towards the US election as well. That might not be an immediate trade that suddenly breaks out, but you could see that slowly staircase higher as we get closer towards the US election into the first week of November. This really does come down to understanding a professional, research-driven approach in the market, where you need to be learning and understanding the daily, weekly, monthly, quarterly, real-time, data-driven cycles for each commodity. Further align that with the capital flows in the market. So the hedge funds, the money managers, the banks and institutions, what they're doing in the markets in real time. In addition to that, you want to be aware of the intermarket correlations, the ratios in the market, of course, the geopolitics, the fundamentals, the macroeconomics, and further compound that with data, statistics, market intelligence, utilizing a professional AI-driven, research-driven approach. All of this is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.